It's 11 p.m. on a Tuesday night. January's almost over, and you're sitting at your kitchen table surrounded by a stack of 1099 forms and a growing sense of dread. You've paid 32 different contractors this year. Photographers, freelancers, the guy who fixed the HVAC, and every single one of them needs a form. Or at least, that used to be the rule. What if I told you that Paperwork Mountain is about to get a whole lot smaller? For 70 years, the IRS kept the same 1099 threshold, $600, set in 1954, when Eisenhower was president and gas cost 22 cents. Adjusted for inflation, that $600 is worth about $7,000 today, but the threshold, it never moved, not once, until now. In July 2025, Congress finally did something about it, and if you run a small business with contractors, you need to know what changed. Here's the signal. The One Big Beautiful Bill Act, yes, that's actually what it's called, raised the 1099 reporting threshold from $600 to $2,000. That means starting January 2026, if you pay a contractor less than $2,000 in a calendar year, you don't need to send them a 1099, period. No more chasing down W-9s from the one-time consultant. No more tracking tins for the photographer you used at that single event. No more compliance headaches for small payments. And here's the thing. This isn't some minor tweak. The IRS themselves called this the most significant overhaul of information reporting in decades. Let me give you the specifics. According to 1800 Accountant, both 1099 MIC and 1099 NIS MIC forms now follow this new $2,000 threshold for payments made starting January 1, 2026. That's a 233% increase in the threshold. OnPay reports contractors receiving between $600 and $19.99 annually will no longer get any 1099 at all. But wait, there's more. Calibre CPA Group confirms that starting in 2027, this threshold gets indexed for inflation. Adjustments happen automatically in $100 increments. So unlike that frozen 1954 threshold, this one will actually keep up with the economy. The bureaucratic burden should stay proportional to real dollar values. Now let's talk about who benefits most from this change. If you're running a small operation with lots of contractor relationships under $2,000 each, this is your moment. Think about it. The freelance photographer for your website update, $800. The consultant who helped with one project, $1,500. The HVAC guy, $1,200. Under the old rules, every single one of those needed a 1099. That meant collecting W-9s, verifying taxpayer IDs, filing with the IRS. Hours of administrative work? Under the new rules, none of them require a form. 0. You just pay them and move on with your business. Calibre CPA Group estimates that businesses issuing many 1099s each year may see significant reduction in total forms filed. That's real time back in your pocket. But let's be clear about something important. This change affects reporting requirements. It does not change who owes taxes. 1800 Accountant is very clear on this point. All income remains taxable regardless of whether a 1099 is issued. The reporting change doesn't affect anyone's actual tax liability. Your contractors still owe taxes on every dollar they earn. They're still responsible for reporting that income. You just don't have to be the one documenting it for the IRS. And here's another important detail. The 1099K threshold, that's for payment processors like PayPal and Venmo, has also changed dramatically. According to Landmark CPAs, Form 1099K is now only required when payments exceed $20,000, and there are more than 200 transactions annually. That's a massive shift from the previous rules. Small sellers using digital platforms got caught in a web of complex reporting. Now there's breathing room. There's one more technical change worth knowing. OnPay notes that backup withholding threshold also increased from $600 to $2,000, and that gets indexed for inflation too. Backup withholding is what happens when a contractor doesn't provide a valid TIN. Previously, you had to withhold 24% on payments over $600. Now that kicks in at $2,000. So what should you actually do with this information? First thing, and this is critical, review your contractor payments from last year. Identify which relationships fall below that $2,000 mark. You might want to create two categories in your contractor tracking, those above threshold and those below. This helps you know exactly who needs documentation and who doesn't. Now, here's something to consider carefully. You may want to update your W-9 collection process. You can afford to be more selective about which contractors require full documentation up front. But, and this is important, you should still keep records of all contractor payments, even under threshold ones. If the rules change or you face an audit, you'll want that documentation. Remember, payments over $2,000 still require 1099 filing. The deadline stays the same. January 31st for contractor copies, February 28th for paper IRS filing, March 31st if you file electronically. One more thing you might consider: informing your bookkeeper or accountant about these changes before year-end planning begins. They may have different advice depending on your specific situation. Your mileage will vary here. Every business is different. But the pattern we're seeing is clear. Less paperwork means more time for the work that actually grows your business. CSI Accounting put it well in their analysis. This legislation aims to reduce what they called the paperwork mountain that's been burying small businesses for years. And let's quantify that mountain. If you have 20 contractors under the old threshold but above 2,000, that's 20 W-9s, 20 TIN verifications, 20 forms to prepare and file. At maybe an hour per contractor when you count the back and forth, that's 20 hours. Minimum. 20 hours you could spend on your actual business. Now, some tax professionals have raised concerns about this change. Critics argue it can make contractor income easier to underreport, shifting audit burden to individual filers. There's also worry that some businesses might deliberately structure payments to stay under threshold, fragmenting work relationships across multiple entities. But proponents have a fair counterpoint. Contractors have always been responsible for reporting all income, regardless of whether they receive a 1099. That doesn't change. The threshold simply acknowledges 70 years of inflation. It's bringing the requirement back to something proportional to modern economic reality. Here's something worth thinking about. Just because you don't have to file a 1099 doesn't mean you should stop tracking these payments entirely. You might want to keep a simple spreadsheet. Contractor name, date, amount, purpose. Takes 30 seconds per payment. But if anything changes, threshold adjustments, audits, you're covered. And remember that inflation indexing starts in 2027. That $2,000 threshold today might be $2,100 next year, $2,200 the year after. That's built-in future-proofing, something the 1954 threshold never had. According to Caliber's CPA, adjustments will happen automatically in $100 increments based on Consumer Price Index. So for once, the tax code is doing something sensible, building in automatic updates so we don't end up with another 70-year gap between reality and regulation. Let me give you a practical timeline. If you're paying contractors in December 2025, the old $600 rules still apply. Those payments still need 1099s if they cross the threshold. But payments made on or after January 1st, 2026, that's when the new rules kick in. So if you have flexibility on timing, there may be reasons to think strategically. Now, I want to be clear about something. I'm not suggesting you delay legitimate payments for tax convenience. That creates its own problems. Cash flow, contractor relationships, trust. But if you're already planning a January project and the payment would naturally fall after the new year, understanding the thresholds could inform your planning. This is where working with your accountant matters. Your situation is unique. What works for a 10-person service company might be completely wrong for a solo e-commerce operation. If you found this breakdown helpful, hit subscribe. We cover signals like this every week, the regulatory changes, market shifts, and practical strategies that matter at the small business scale. One last piece from Landmark CPAs. They emphasize that proper record keeping remains essential even for payments below threshold. The IRS can still request documentation during audits. So here's the bottom line. Less paperwork doesn't mean less responsibility. It means you can focus your compliance energy where it actually counts. For years, small business owners spent hours documenting payments that barely move the needle. $800 here, $1,100 the hour. Hours of compliance for minimal tax relevance. Now you can redirect that energy, spend those 20 hours on marketing, on product development, on actually talking to customers, on the work that builds your business. That's the real value here. Not just the paperwork reduction, though that's real. It's the recognition that small businesses shouldn't carry disproportionate compliance burdens. The signal is clear. For the first time in 70 years, the threshold moved, and it's going to keep moving. Indexed to inflation, automatically adjusted, proportional to reality. That's 20+ hours back in your pocket this tax season. Use them well, build something, serve someone. That's what you started this business for in the first place. This content is for educational purposes only and does not constitute financial advice. Always consult with a qualified advisor before making significant financial decisions. I'll see you next week. Remember, this content is for informational purposes only and is not financial advice.